Good morning, everybody. This is K. Balakrishna. Presently, we are dealing with the subject called as financial services. In this class, we will discuss about various introductory aspects to the financial services. In the earlier class, we have discussed regarding various types of financial services. This would add an advantage to the earlier video. What is a financial institution? All the any institute organization that performs the financial transactions is called as a financial institution. And all the services rendered by those financial institutions are called as financial services. What are the features of financial services? We cannot see the service, we cannot touch the service. Such term is called as intangibility. Its services are different from one place to the other, one institution to the other, and from one time to the other, different services are provided by the same service provider. This is called as heterogeneity. So there is the entire quality of the service depends upon the quality of employees hired by the people. That is called as labor intensive. We cannot separate the service from the service provider. That's called as inseparability. What is the role of services in economic development? What is the role of services in economic development? First and the foremost is they provide financial assistance or capital to many institutions. Example, venture capitalist services provide financial and technical assistance to the entrepreneurs. They provide risk management, means they protect our investment, they safeguard our investment to the maximum level, and they ensure that the risk is minimized and risk is shared. For example, portfolio services rendered by the merchant bankers. Fund pooling, they help in gathering the investments from various investors and petty amounts and then investing in multiple sectors at a time. Example, mutual funds. Whatever may be the financial service, the outcome is for the development of the country, for the growth of the country, for the growth of the economy itself. Promotion of savings. They help to mobilize the savings and give some amount of income to the investors. For example, banking services. You save your money into the banks and banks will give the interest rate to you. Provision of liquidity. These financial institutions can be easily converted into cash. Creation of employment. The employment opportunities is created as, for example, financial analysts, financial consultants, stock brokers, stock analysts, etc. are consulted during this. It's easiness of transfer of money. Easiness of transfer of money means the money can be easily shared across various people, and the mobility of money can be present. Monetary stability can be achieved. Financial services. Factors affecting the growth of financial services. It depends upon the economic policy of the government. It also depends upon the economic system or there's a type of economy. For example, in Indian economy, capitalism plays a major role. Sometimes private players also plays a predominant role. In Chinese economy, government enterprises plays a major role. And in US economy, private people plays a major role. Government reforms. Various changes need to be made by the government so that they adjust to the changes, so that these financial reforms will lead to the development of the economy. Stage of development. Based upon the stage of development, they are divided into three types: underdeveloped, developed economies, and developing economies. And that the present stage of India is totally dependent upon the service sector. In the past, it depends upon the agriculture, but now it depends upon the services. That's macroeconomic variables. It includes political conditions, economic conditions, social conditions, legal conditions, and many others. Incentives for innovation. Incentives for innovation in the sense various innovative investments are present, like derivative market, etc. And various regulatory agencies are also present, like IRDA in insurance segment, SIDBI in small scale segment, RBI in banking segment, and many others. The advancement of technology has made the service sector boom like anything. It has the greatest impact. Financial services and industrial development. Finally, here it helps the company, it helps the country by providing issue management services. Various public limited companies are established just because of industrial development. Next, working capital finance. Day-to-day requirements of funds are only possible to provided to the company through working finance. Equipment financing includes leasing, hire purchase, etc. It also provides a long-term risk capital through investments through the stock market, investments to the mutual fund market. It also provides equity financing through mutual fund markets, stock markets, and derivative markets as well. It provides risk management through derivatives. We will discuss about the derivatives in the coming classes to go. It also provides safety through the credit rating. If the company is rated to the maximum, to the highest level, it indicates that it is a suggestion to the investors to invest. If poor rating is there, investors do not invest. Underwriting is present. What do you mean by underwriting? It's a process of selling the remaining stock left out after a public issue. Refinancing, depository services. What do you mean by depository services? Means depository services includes credit card services. Credit card services includes using the bankers' money to purchase the goods, necessary items that are required, and later the bank will deposit the money into our account. We use the money and later we pay it to the bank. This is the procedure usually followed through credit card services. It's a stockbroking services. It is a stockbroker which helps in maximizing the investments through stock market. This is a small analysis regarding factors affecting financial services as well as role of financial services in economic development. Thank you.